What's up, guys? We are live and back on the Holy Macro Show. Lots to go through today. The markets are moving fast, and there's a lot to talk about. Kashop, you're the guy to talk about a lot of these things. I know we've talked a lot about crypto this year. It's been up, it's been down, it's been sideways, it's been frustrating. You got out of it a couple years ago. You talked about you were interested in it again. Starting off, are you still interested in Bitcoin? Are you seeing that trade might be over? Or are you thinking that, this is possibly a good thing? Or is there a catalyst that you're waiting for?
I got out of Bitcoin in 2024. That was at the Q1, close to the Q1 2024 top, and I have avoided it ever since. So, but what happened, interestingly enough, was when the Iran war started, and Iran said they are going to take tolls, $2 million per ship, and they are going to charge those tolls in cryptocurrency. I thought, okay, now that's going to be an interesting use case for Bitcoin because, as everyone knows, USDT, USDC, they can be frozen at the whim of the US government, whereas Bitcoin, it technically, the way the network exists right now, it cannot be frozen that easily. It can be sanctioned, but I mean, all Iranian assets are right now sanctioned. I mean, were sanctioned. So I thought, okay, here's an interesting test case for Bitcoin. Can a nation state actually adopt it for payments and bypass the US control system? And I thought at that point, the chart looked good. It was like a wedge pattern, which I expected it would break out of that wedge. So I issued a buy recommendation. And that worked well. Bitcoin hit a high of 82K soon after that. And then came right back down to my entry. Now, the reason it came down is because, well, the Iran war sort of ended. There was an MOU signed saying that in 60 days of negotiations, the war will officially end. And the markets took that as the sign that the war was over. And Iran got access to the US dollar system for its oil. It got access to all its frozen assets everywhere in the world. There was talk of giving them $300 billion in aid plus another 100 billion in frozen assets that would get released. So all of this put together, it kind of made me realize the entire thesis for which I bought Bitcoin, knowing that there are all these problems that we are going to get into now. So the entire thesis, the reason why I bought Bitcoin, no longer exists. In one fell swoop, the end of the war just took that use case out. And so I sold. And this is the good part because I had such a good entry. All I really ended up doing was giving back my gains. So it was like a popcorn trade, went up, came right back down. Didn't make money, didn't lose much. Like anyone who bought on the day of the recommendation, the buy recommendation, and sold on the day of the sell recommendation would have lost something like 7%. If you bought Bitcoin itself, then you would have maybe lost 2-3%. So I think that's a damn good trade considering how volatile Bitcoin is and given its history. And it turns out I kind of got out right in the nick of time because the 60K floor stopped holding, and now we have this news that Sailor might be the next Terra Luna kind of situation where it's just leverage spiral all the way down. So that brings us to our chart. Now, this is the chart of MicroStrategy, and now they named themselves Strategy. This is the chart of their shares outstanding. This is just MSTR, not the other entirely new waves of instrument they have issued. So just MSTR shares alone has grown from roughly 97 million Class B shares all the way to 334 million. That's like massive amount of dilution. And all this just so that they can buy Bitcoin. Now, here's the interesting part. Michael Saylor and the company representatives, whoever is on Twitter, everyone just always says buy and hold, do not try to trade this. Bitcoin is the end game, the exit, never sell your Bitcoin or, stuff like sell your kitty before you sell a Bitcoin, sell your house and buy Bitcoin, all this nonsense that they put out. Well, they actually don't practice what they preach. So Michael Saylor in the last 5 years, he has been he has sold 101 times and not once has he bought shares in his own company. Now, this is a guy who tells you buy and hold, buy and hold, buy and hold, and he dilutes you while saying this. and all he ever does is sell. And in 2023, he put in a plan where he said, I'm going to sell 400 million worth of shares. And because I'm so open about the fact that I'm selling it, and it's for all these options, taxes, all these purposes, don't you worry a pretty little head about it. It's for all these purposes. And so, it's a legitimate exit. It's not a sign that I'm changing my strategy. And the market just gave him a free pass while he cashed out roughly $400 million dollars worth of stock. And what did he do after that? Well, you can see the share count increase from 2023, 166 million shares outstanding at the end of 2023 to 334 million. So that's doubly. He is diluted you by 50%, all the while he's cashed out $400 million. Now, that does not sit right with me. That's the kind of promotion that's off-putting coming from someone who, is practically a cult at this point. And all they have done, all the people who have gotten into this cult, sure, the ones who got in early kind of have made some money, but that comes at the expense of everyone who has come in later. Now, here's the wild part. So go to the next slide. So here's the absolutely wild part in all of this. The company itself has been accumulating Bitcoin for 6 straight years. They started in August 2020 and they have this helpful chart right on their website. And after all this accumulation, what they have achieved? Well, they are down 22% or $14 billion on their entire position, which just means buy and hold, which is what they preach. Well, it hasn't worked. We have had two full cycles where the evidence is clear that it hasn't worked because August 2020 was a great entry point. So the COVID low was something around $3,500, and they started buying at, I guess, $7,000, $8,000 odd, and they've been buying all the way up to the top, and all they have now is a big 22% loss. Now, any trader, if you're showing a 22% loss on a position that you consider an investment, sure, you hold it for 1 year, you hold it for 2 years. After 3 years, if you're still sitting on a 22% loss, then even the most hardened investor, the fundamental investor, the value investor is going to start questioning whether it was the right investment after all. Whereas we do not hear such contrition from Saylor or anyone on his team. Even now, all they tell you is, the strategy is great, it's working as intended, and Bitcoin can go down to $1,000 and they'll still not get liquidated. Well, sure, you may not get liquidated, but the point of any investment is to make money. You can say that, I have $100,000 account, I'm going to short 100,000 worth of crude oil and I'm not going to get liquidated until it doubles. Sure, that's a perfectly that's you're right in saying that you will not get liquidated until it doubles, but is the point to wait until you get liquidated or to take a proactive step? And right now, all they are doing is defending their actions, saying, "We will not get liquidated. We will not get liquidated." And the market likes to kind of play with MicroStrategy now. So what the market is doing is, let's find the puke point for Bitcoin at which something changes, and that's what's happening. And since there is no real use case for Bitcoin beyond the BlackRock ETF accumulation or strategy accumulation or any of these other Bitcoin so-called treasury companies accumulating it. It's just the market is going to find that pressure point and they're all going to give up. And that's when we have the news cycle. And this is something we saw in 2022 as well, where all these yields taking products came up and then they all went bankrupt. Then you had the big one, which was the FTX crash, which was embezzlement. And after that, the cycle reset. So I think the Bitcoin market is in for something like that. And I would just avoid it or enjoy the fireworks watching on the sidelines or, maybe short it if there is an opportunity. But the problem is it's very difficult to short this market given the crazy leverage in the system and the interests of all these players in moving the prices. So this is something you do not want to be long. You can be short or you can be neutral and watch the fireworks.
No, I agree. I think that's something that, and what's interesting about this chart, if you look at it, you see part of the reason why the underperformance, and this is the reason why I always caution people against like long-term strategies where they're just adding either pyramid. I mean, this is just a mess. This is a bit of pyramiding, dollar cost averaging, just whatever the hell you want to do, basically, depending on the time frame, how much money they're bringing in, and so on. But if you look at the last from 2025 on, there's a reason why they're losing a bunch of money. Like that's a lot more buys than ever before. So it's like they're buying at the most at the highest prices, they're buying the least at the lowest prices. Of course, at a certain point, this is going to turn out pretty terribly. The question for you, though, I hear this all the time about MicroStrategy and what's going on. Is there a point where this thing just, I mean, I'm sure you're going to say yes, but I just don't know the when, because I think at some point this explodes and is a Ponzi scheme in a sense. So, what do you think about that? Do you think at some point this whole thing implodes and once again Michael Saylor's blown up another company, or what do you think?
So the 2000 dot-com bubble, he blew up because he made he later settled the charges without fraud, but effectively it was something close to fraudulent revenue recognition. And once they had to restate their accounts, the stock crashed, and there's a famous headline where Michael Saylor lost $6 billion in a day. Now, this situation is a little different. The thing is, there are two classes of common shares in MSTR. So, one is what you see on your screen, the one that you trade, which is just falling hard every day. And the other one is these Class A shares, which give him super voting rights. So, Michael Saylor cannot be kicked out of this company even if he runs it to the ground because he has the votes, he has the ability to block any hostile takeover or corporate trader or anything of that sort. So, what really needs to happen is he needs to get out voluntarily, and someone, a liquidator, someone comes in and says, we are going to unload this balance sheet, claw it all back at a minimal loss, and just end this whole pyramid scheme, which is what you called it, which is perfect. So end this whole pyramid scheme, go back to the software business, which is a money loser, however long that goes on, or maybe that gets acquired. And that's, I think, the end result here. And I don't think Saylor wants that end result because that would be disappointing this whole Bitcoin cult. And this is something that we saw this exact same dynamics played out with a coin called Terra Luna in 2022. So you had this big billionaire sitting in Singapore who was talking up, they are going to create a new economy based on this coin, the staking rewards, a lot of words that people didn't understand. And in less than 5 days, the entire thing crashed. And because it was algorithmic rather than discretionary, the coin just went to zero. Now, in MicroStrategy's case, the buys, the preferred share issuance, all of this, it is discretionary, it is not algorithmic, which means we probably see a slow burn. We probably see MicroStrategy just like there's this other company, Bitcoin treasury company called Naka. The ticker symbol is Naka. The stock name is kindly MD. And what they have done is they have diluted shareholders to the point where the stock is down 99% and it can still go down another 99%. So I think MicroStrategy probably does something like that where it's a slow burn for shareholders all the way to the end point or until this company gets liquidated or Saylor exits, gives up his Class A shareholdings, and someone else comes and cleans it up. I don't know how this ends, but this is a slow moving train wreck. Everyone can see it's going to get wrecked. No one knows when it's going to happen, how it's going to happen. The best thing you can do is avoid it or see if you can make money on the short side. So I would be I would caution against shorting this because I've done this before. And what I have noticed is that the Bitcoin cult, it's kind of a large cult. And when you attack their leader, they tend to behave in irrational ways. So
Yep.
I have these posts from 2024 where, you say anything against Sailor, you get so many personal attacks. Like there are all these accounts which would take screenshots of me and, make fun of my face, color, everything. So, they get vicious, and a vicious mob if you're shorting something which becomes a popular shorted stock, then you're going to be in for a short squeeze. So, to give you an example, there was this company called Carvana, absolutely nonsensical business, and the stock just squeezed and squeezed and squeezed because of the short interest and because they built an army of people who are long. So, I would be very cautious in dealing with shorting MicroStrategy or any of their products on the short side. But I mean, if this crashes the way Luna does, then you're going to make a buttload of money in a very quick time. So there is an opportunity here which you can look at.
Yeah, I think there's something here, and I think it's something that people, it's going to be tough because once again, it's like you said, it's always a fight when you short something where people are so vicious about it. Not like Tesla was, like all these things were over the years. If you have a bunch of people defending it, sometimes the fundamentals don't matter as much as the ability to people to say, "Hey, I'm going to hang on to these shares no matter what. I believe in this." And it becomes a religion almost, in a very disturbing way where they will hold on to it no matter what. So, I hope that not a lot of our listeners are hanging on to this stock thinking it's going to be the best thing in the world in 20 years. We'll see how that goes. But so getting to some other things, crypto is also intertwined with the dollar. The dollar is also getting stronger. We have seen this big move up. It finally has given some back. My thought has been Warsh coming out, basically acting very hawkish, while at the same time of being, I feel like part of that was bullshit. He had no choice but to come out very hawkish. If he would have came out and been like, "Oh man, I'm gonna just leave rates low and maybe cut them even lower," and like everybody would have known he's a puppet for Trump. But he came out the other direction, acted real hawkish. And there were some things about it that were like I wanted to read into a bit more and go, well, maybe I'm wrong. Maybe he is a little bit more hawkish than I thought. But there is one thing that actually this chart, I was looking at this the other day, and of course I have to reset this. So give me a second, guys. Let me refresh this screen. But I was having something, we're looking at the new Fed measurements. And as we're looking at the new Fed measurements, we're kind of seeing something that they're using that's definitely something that we're not that haven't been using in the past. So let me bring this back up here. I think it'll work now. All right. And there we go. Okay, so we're going to be looking at this today. So this guy, Boris, sent me this the other day. I don't know if he made the chart, grabbed it from somebody, but Dallas Fed trimmed mean. So I started looking at this index like last week when he was talking about how they're going to start using this as what they're going to look at to understand inflation, which kind of just made me laugh because I'm like, oh man, what's this new measurement? Then I would go and look at it, and it's basically saying like there is no inflation at all. And compared it to the PCE, which is also a pretty bad measure of inflation as well. But that's what they've been using. But now it's showing some increases in inflation. We don't like that. We can't have increases in inflation. So we're going to go to this new thing called the Dallas Fed trimmed mean. Now, I don't know what components are in it, what it even uses. I don't know if you do. But I
So
go ahead.
what this means is, let's say gasoline prices go up 10% in a month, war, shortages, something. And let's say beef prices go up, again, some shortage, some situation. So what this does is it says, well, these values have gone up too much. So let's drop them from the inflation calculator for this month. That way we don't have to print excessively high CPI. We can just say inflation is not as much as you see on your screen because we are taking out all the outliers. So that's pretty
Low
much
target.
what, yeah. And I mean, it's the same thing. So they would say, if gasoline decreases 10%, we'll do the same thing. But realistically, it's never going to drop 10%. So all this does is hide the inflation that's actually happening while providing cover for using a different smoothing measure, which drops the outliers in the data. So this is just going to make the Fed's job easier in pretending that there is no inflation. So 2019, you remember this. Janet Yellen comes out and says she is worried we have too little inflation. She's like, we printed all this money, so where is it going? Why is it not showing up in higher prices? And everyone watching this is like, what is she talking about? And then inflation picks up, and then they're like, oh, this is just transitory. And then 5 years later, it becomes a problem, and they're like, Trump says, let's just fire the head of the BLS, so they don't make the data anymore. But the problem is the data is open source, so everyone starts filling in those empty cells. So now they are like, okay, let's do a trim mean where we say, take the outliers out of the data, let's smooth it and show that there is no inflation.
It's so crazy. I mean, it's the constant movement that they do from like one index to another to another to another, continually just trying to find a way to tell us that there is no inflation, so they can just do whatever they want with rates. I found it funny. I mean, it was interesting because it's like the whole market kind of reacted in a new rate hiking environment way, and really, it's like they're not going to. I would be very surprised if they start hiking rates. I'd be very surprised. People are looking at it like there's a rate hike priced in for year end. I would still be surprised. Now, once again, it can happen. Like the ECB is also raising rates, so the European Central Bank's raising rates. There's other countries that are raising a little bit here and there. Nothing major just yet, but most of the time, the Fed is going to follow this. If every country is doing it, the Fed probably is the one approving them to do it in the first place. People don't think that, but I don't think these things are independent on their own from each other in each country. I'm pretty sure they all kind of work together. And so if we're going to see that situation kind of happen, yeah, sure, it's possible that the Fed comes in at some point and raises rates. But I think overall, like they're just going to hang that the Fed rate, keep it low, continue to pump the money supply, continue to talk hawkish while doing very dovish things. And that's what I'm kind of seeing right now from Warsh is he's talking hawkish, he's doing dovish things. And so at the end of the day, it's the market's probably going to continue to go up, but where? I see like there's a lot of things that are looking pretty bad right now. We'll talk about the mags later. You've been very bearish on semis, mags, a lot of things you've been talking about lately. But first, let's go back a second. I want to talk to you about the yen. So Japan has been an interesting one. Stock market has been very solid. The bond market has been, for the technical term, dog shit. It's been terrible. It's just been literally going in a downtrend for years. The yen has obviously looked about the same, as you can see in the chart. So what's going on with Japan? You always have very good views and a very interesting take on what's going on in Japan most of the time. So what are you seeing here right now? Do you think they're going to jump in? Everybody's like, oh man, the intervention's coming soon, or anything's going to happen to strengthen the yen. Nothing is happening. It's just falling off of a cliff. We're at a 40-year low. I couldn't even figure that out this morning. I was looking at it. I was like, there's no way that's 40 years. And I'm sitting there and I'm like, no, I'm 40 years old. I was born in 85. This goes back to 86. It's 2026. I couldn't believe with my own eyes that it was 40 years. So what are you seeing here with Japan and the yen?
So I think the US has a choice. They can either tell Japan, yes, you can unwind these carry trades and strengthen your currency, or let the currency go to save the AI bull market. Now, the reason I'm saying these are the two, it's a binary choice, is because private equity has been borrowing in Japanese yen ever since Abenomics came into being. So that was the famous three arrows policy, and all the arrows were basically just let's print more money. So they have been doing that, and the effect of that has been to debase the yen to the extent that Japan has gone from 3 decades of deflation to food prices being up something like 10-11% a year, which is crazy for that country. Now, add on top of that the energy crisis that they had with the Strait of Hormuz closing. Now, all this does, it puts a lot of pressure on the people. So the best way to deal with this pressure is to strengthen the currency. Bank of Japan said, let's hike rates to 0.1%. I mean, like, that's not going to solve anything. Sri Lanka hiked 75 basis points, and that did not solve anything. So they need to do an aggressive rate hike, bring rates to 4-5%, which would probably end up killing the carry trade because the carry trade depends on really low borrowing cost. So it would probably end up killing the carry trade, which would end up killing private credit, private equity, all the soft bank money that's been funneled into the AI ecosystem, the tech ecosystem, is going to make it really difficult for US borrowers who have access Japanese credit. But the end result of that kind of rate hike policy would be the Japanese people benefit because uh, right now it's like, hey, there's all this wealth in Japan, and it's practically free for Americans to just go in there, take it, and give it back whenever, and they probably give back less of the wealth because the currency would have depreciated. Whereas now, if the Bank of Japan takes the contrarian stance and they say, no, enough is enough. If you want to take a part of our wealth, if you want to borrow a little bit of our wealth, you have to pay us acceptable return. Well, then it's all going to go bust. So the US has a choice. They can let Japan interfere in the currency market, try to sort of prop it up at the 160 level without the treasury naming Japan a currency manipulator. So the US has these levers of control. So if Japan is labeled a currency manipulator, then they're going to get some kind of access revoked. They are going to get some kind of punishment in terms of trade. So the US can just say, intervene in the currency market, try to defend it. But ultimately, everyone knows, like, every trader wants to be Soros who breaks the Bank of England. So they want to break the Bank of Japan. So as long as people know the Bank of Japan is actively interfering and trying to hold this peg is not going to hold, which means 160 is going to break. So the only solution is to hike rates quite aggressively. And if they do that, the AI bubble collapses. So they actually do not want to do that because that is not in the interest of the people who run the Bank of Japan and the other banks there. But it is in the interest of the Japanese people. So I don't know how this would play out. I think this is going to require a political solution. So we saw something in a much smaller island economy, which is Sri Lanka, where they had the same kind of pressures in 2020 to 22 because Sri Lanka depends on tourism income and tourism dropped. And they had this crazy policy where they said we are going to ban fertilizers. So agricultural exports dropped and the currency came under pressure. The government fell, new government came in, devalued, and they brought prosperity back. Now, you could have that outcome where a new government comes in and says, let's just let the market decide where the yen has got to go. Maybe it goes to 200, maybe it goes to 240. And the end result of that would be massive inflation in a society that is both old and not used to inflation. So they cannot really do that, which means the best thing to do would be to aggressively hike rates and kill the AI bubble and end the carry trade. But doing that is against US interests as well. It's against the investors' interests, it's against the bank's interests. So I don't know which way this plays out, but it is going to be a political solution.
Yeah, I think that's an interesting thing with Japan. And most of the time, it is a very political situation. And so, getting to the meat of this move, what we saw at the beginning of this year hasn't been happening at all lately. Is the energy trade. So the energy trade has definitely been shutting down more and more. The December contract that I was in got stopped out. So everything has been kind of moving the other direction, but the energy sector compared to oil actually looks pretty decent currently. It's holding up much better than oil. It's holding much better than gasoline currently. And so, looking at this breakout, to me, it's like this is usually the beginning of a big trend. This is not a way a trend ends usually. So you see this breakout, you see the pullback. There's usually the first big pullback after a major breakout. Most of the time that ends up getting bought up. But right now people are probably very spooked by the Iran situation. So what do you think about the Iran situation? We haven't gotten to talk about the real ceasefire that supposedly has happened, even though there's been some fires lately. We could talk about that as well. But so what do you think about the Iran situation? Do you think this is something that really has come to an end, or do you think that this is a situation that is possibly just for me, I'm kind of looking at it like it's a possibility of somebody just needs to throw a match in there and it's the end of the world, basically. So what do you think about the whole situation currently?
So I think if you look at the terms of the MOU and if you look at the way in it which it was signed, I think this is pretty much Trump waving the white flag and saying, we bit off more than we could chew. No one wants this war. Let's just end it. And whatever the terms of, let's just accept it and move on. Because that's pretty much what the MOU seems like. So Iran gets 300 billion in reconstruction funds. They get 100 billion in their frozen assets released. And together with Oman, they sort of control the Strait of Hormuz. It's similar to how Egypt controls the Suez Canal and Panama controls the Panama Canal. So they're going to have control over the strait. And those seem to be the terms that everyone seems to be fine with for now. Now, given that we have had this major de escalation, now there is the Israel Lebanon conflict that's going on, but given that there is this major de escalation, what is the appetite to resume a hot war again? And I don't think that appetite exists because it's been earlier wars could be fought for years and people wouldn't be aware of it. But now in this hyper connected world where everyone's thinking in terms of the next election cycle, the next month, the next quarter, running a war for that long, the consequences, the actual economic and financial consequences are starting to be felt, and it can be calculated on a daily basis. So, in this situation, I don't think the appetite exists to resume a hot war, which means this is probably it's probably going to be peace for the Middle East, except Israel Lebanon situation. So, uh, but even with that in effect, it's still bullish for energy in the sense all we have done is we have taken all these vessels which were locked inside the strait. We have taken some of them out. More of them will come out soon, sure. But the lost capacity, that's not coming back. All the inventory that has been drawn in order to make sure the effects of the war have not been felt, well, that inventory needs to be replenished because otherwise you're looking at permanently depleted inventory, which is not what anyone would want. Like the whole point of having a strategic petroleum reserve is to draw it down in these situations and then build them back up in peacetime. So there's going to be another source of demand coming soon. So all these put together, and if you look at the forecast for oil consumption, it's going up something like 6 million barrels. So that's once again bullish. So all factors put together, I think we are still in an energy bull market. The oil price does not reflect this, and of course, the oil price has been manipulated. Japan has openly contemplated shorting crude oil futures, and maybe they have, maybe someone else has. I do not know, but those contracts they have clearly not reflected the reality of the situation. So I don't know what happens, but I think energy stocks as a whole should continue to do well because, well, you cannot manipulate markets forever. Like if you look at the London gold pool, they probably succeeded for 4 years and then gold just took off. So I don't know how long this lasts, but I think oil will just take off at some point, and you want to own something in the energy space when that happens.
Yeah, I wanted to answer this question, coming up here. Why were oil investors so wrong on the price action? So there's a couple things that are kind of funny about this statement. Number one, you're watching TV and people are throwing out huge numbers, 200. I mean, Josh Young, buddy of mine, but 250. Once again, you're always thinking of one time frame. I don't know these other people's time frame. I don't think it really matters. And you guys have been around me long enough that like I don't say price targets. I mean, I even wore the hat that I got from Josh, and I said like I'm not thinking oil's going to hit 250. I don't know where it ends up. So the most important thing as a trader is to really understand like you don't know where this is going to end up or anything's going to end up ever. And someone on TV sure as hell doesn't either. Just because they're on TV doesn't make them smart. There's plenty of dumb people on TV. Let's be honest, that's the truth. But most of the time with trading, like you can't put a price target on things. It's hey, this thing's what the way I talk, and you guys will hear this all the time. Hey, these are in an uptrend. Hey, these are in a downtrend. Hey, this is breaking out. Hey, when I talked about the Venezuela situation when oil was under $60 and talking about buying oil again, that was me just coming in and saying, hey, this is a great time to buy. And then after that, for me, once I'm in a trade, it's when is the stop loss hit, and it was pretty far away. So I mean, we made a lot of money on those trades. Still, the energy trades were still great. It was just now a lot of them have come back. Some of the stocks have held up though. Some of the ETFs have held up though. So we're not looking. You don't always have to look at it as in like, oh, price target. I mean, honestly, like, let's be completely honest here. And I work with a lot of people who use price targets, and I know a lot of traders, especially technicians, love price targets and Fibonacci's and all this shit. It's trash. You're never going to know exactly. Like, yes, you can go back in hindsight and be like, look at how this worked and bounced off of these levels perfectly. Sure, but as a trader trading them, it's very hard to get an understanding of when the price is going to stop. These magical levels, like support resistance zones, make sense. It's where investors know where they're going to buy, sell, a price that's too high, a price that's too low, an expansion of momentum. Like, you can get all these understandings from a breakout of a price level. But just looking at something and going, okay, with my fib has told me this, or measured move is another one we use as technicians. Yeah, I measured the move; it should have hit this. None of that matters. At the end of the day, I'm going to put on this position. I'm going to run a trailing stop and make sure it's wide enough that it just doesn't chop me up in my time frame. Um, I'm going to have an exit signal. This is when I get out of the position. This is when I get into the position. The trailing stop is just for in case shit happens, which it does from time to time. But most of the time, I'm looking for a signal like a 50-day low to get out of the trade on or something like that. So get an understanding of those things, and you're going to make a lot more money than anybody who's looking at price targets or saying 150, 200, 250. That sounds good. I could get on TV and Kashop could get on TV a little bit more if we said things like the price of Bitcoin's going to zero. Bam. Like, people would love that if Kashop got on and said it's going to zero, it's worthless, it's the biggest junk, it's the junkiest thing in the world. People would love that. Same thing for me if I got on there and I said, hey, gold, now that it's around 4,000, it's going to 10,000. I mean, I've literally have been asked to have something where I talk about gold going to 10,000. I refuse to do it because I don't think it's going there anytime soon. Now, granted, maybe long term, maybe over the next 20 years, maybe 10 years, maybe 5 years. I'm not sure, but I'm always looking at what the trends are within my time frame, and most of my trades are within 6 months to a year. So understanding that is going to make you a lot more money than trying to figure out price action or listening to anybody. Like, nobody knows where a price is going to end up. The best thing you can learn from traders is what they're doing, where they're getting in, where they're getting out, how are they managing risk. The best time you can follow traders and like your newsletter subscriptions and all that stuff is when the markets are in a bad state. So currently the markets are choppy. The current market environment is frustrating people, driving people crazy. See what your gurus are doing currently now. How are they doing? Are they sticking to their process? Are they sticking to their strat? That doesn't mean they have to make money every day. That's impossible. But are they sticking to their process? Are they sticking to their strategy? Are they panicking? Are they losing their mind? There's that one oil guy. I forget. He has the frog face on there. I forget his name, but he's over there, panicking, freaking out every other day. Like, if oil was going up and he was, pounding the table, how he's the smartest guy and he's doing this, and now it's going down. He's like, the entire thing's rigged. This is it. Like, the market's rigged. This is why I can't make money, because they're scamming me and blah, blah. Like, if you find people like that, run the other way. Because even if the market is completely manipulated and it's a complete scam, that doesn't mean I get to say I'm going to stay in this position because it's a scam, and it'll figure itself out. So don't pay attention to people talking about price targets. Don't pay attention to anything but risk parameters, and keep your peace of mind and just trade the way you do. Trade your time frame, and you're going to do better than most of the other traders out there.
And just to add one little point to this, we are all focused on the oil price and saying, why did everyone get it wrong? But let's be very clear that oil is up something like 50% year to date. Gasoline is up something like 60% year to date. So these are already phenomenal moves. It is just that they did not happen the way people think they would happen. And that's the other part of trading, which is you might think markets move after the news is out and people are going to take positions, whereas in reality, the move may have happened before the news is out. And in the case of oil and gasoline, the big moves happened before investors started to really anticipate higher prices. So that's why we are in the situation where it's been, yes, there is definitely some level of manipulation going on in the front month contracts, but bigger picture, gasoline is up 60%, oil is up more than 50%, and the moves have already been good for energy investors who were in before it happened. It's been tough for those who got in after seeing the war news. And if you go back to the first Gulf War, you would find something very similar happening. When the Gulf War news came out, I think I've shared this before this, and if you want, you can Google it. There's an article from the LA Times which said gasoline went down on news of the Gulf War, and so did the price of crude oil. Why did that happen? Well, it was because storage was full, inventory was full, or maybe demand just did not materialize the way people expected. So sometimes commodity markets move in ways that you just cannot figure out. So there is that aspect as well. Now, this is not the same as the LME nickel situation, which was just the exchange canceling contracts. This is something much more to this, and we will probably only know what really happened when the history books are written. Once you have all the data, someone does the analysis, like the subprime crisis. The what was the book? I think it was The Big Short. When the book, Michael Lewis book, that came out, that's when people really know what happened in the market. So I think probably 2, 3 years from now, we'll have the real news. Right now, we did get it wrong. Energy investors did get it wrong. But big picture, the price is still up for the year, and it's up big.
Yeah, and it's not, and that's the thing with trading. It's like there's a difference with analysis, right? And if you're an analyst and you're going, okay, well, oil's gonna go up, that's great. And this is what you guys all need to know as traders, which is literally the most important thing you need to know. As an analyst, we can get out here and an analyst can say whatever they think is going to happen, oil to a million. It doesn't matter. They can say whatever they want. And so as a trader, what's the difference? Well, I need to figure out why I buy things and why I sell things. And I don't care about being right or wrong. And when you understand those couple facts, you will make more money than most people in this industry, because most people are stuck at the first phase, which is I need to be right. Being right means that when I buy oil and I think it's going up, I will hold on to that thing no matter what, and let that, like maybe these energy stocks, and I have this belief in these energy stocks. I see people on here talking about a lot of the gold miners. And I know there's people on here who will be like, I'm never listening to this guy again. And I'll get a lot of unsubscribes, because Kashop and I were a part of a business at one point that as long as you kept the simulacrum of, hey, we want to buy gold, we want to buy silver, we want to buy Bitcoin, we're selling stocks. As long as you kept that up, subscribers came in over and over again for these people. Even if they were losing money, which they were losing a lot of money, they were still coming in pretty heavily. So I'll even say, hey, some of these gold miners, like I would be stopped out of them a long time ago. Some of these trades that people keep talking about, silver, I heard brought up, that's been out a long time ago. Like you continue to kind of go through those phases, and you see like you've closed a lot of these positions, and it's all about it has nothing to do with whether I think silver in 10 years is going to do blank. Like, are any of you guys holding positions for 10 years? No, nobody is in here. Like there's nobody in here who is. And I promise you, like, you guys can comment it and let me know, but like I don't think anybody's doing that. Yes, Kashop and I are physical gold and silver holders, things like that. Sure, that's different. But if you're not holding positions for 10 years, what does it matter? It then becomes understanding your time frame, trading in and out of things, being willing to just say I'm wrong and move on. And being willing, and it's not even I'm wrong. Like I don't even feel like I'm wrong anymore. It's more, hey, my signals got long. Was the trade green or red? We made money on this trade. Like Kashop said, like it's still up year to date. We're talking over 50% returns at least. It's one of the best asset classes still out there with this huge drawdown. So at the end of the day, I'm not hanging on to these things over the next 10 years. I just want to know when to get in and out. And that's it. That's all you need to know, and not think about it as in right or wrong. And so we'll go through a couple more, and then we got to hop. Actually, probably one more, and then we got to hop. Sorry, I went on a little rant there. Forgive me for that one, guys. But Kashop, I wanted to talk about shipping with you before we go. So shipping, all of a sudden, most of the shippers started looking a little bit better. This is the ETF. The ETF is not that well constructed. It's okay, not the worst thing in the world, but Frontline is up pretty high currently. I think it's NAT, North American Tankers, is another one I have that's moving nicely. So what do you think about the shippers right now? Because I think if there's an area that's really going to benefit from what's going on in Iran currently in the Strait of Hormuz, it would probably be the shipping stocks, and you're the guy to talk to about them. So what do you think about the shippers, Frontline, any of the name, and even names I'm not naming? What are you thinking about the shippers currently?
So broadly as a category, so you can split them into the container ships, the dry bulk, and the tanker sector. So the tanker sector is the one that's most exposed to the issues with the Hormuz situation. So the tanker sector, it's already moved a lot, and I would love it if there actually was an ETF that let you do a kind of pure play on just tankers. Like you have BDRY, which gives you a pure play on the dry bulk rates, so something like that, but directly on the tanker stocks, not on the FFAs. So what I'm seeing is the tanker situation, it's going to normalize, but actual normalization going back to the pre-war situation is 1 2 years out. And the reason for that is firstly the cruise, like we look at the situation, we talk about what's happening in the market, but the psychology of the people on these ships is now they have been pretty much abandoned for 3 months. No one's talking about them because there are other humanitarian crises which are taking which are taking away the conversation from the seafarers. Now, once these ships are out, recrewing them, is it going to even be possible to get talent? We don't know. So, what's going to happen within the shipping industry in terms of growing, in terms of getting insurance? And now Iran has said they are going to have their own insurance company, and you need to get insurance through them in order to cross the strait. So, what is that going to do to rates? What is that going to do to overall demand? We do not know. Now, in general, disruptions are bullish, yes, but we have already run up so far for so long that maybe it's time to take a little bit of profits off the table, particularly in the tanker space. Now, if you look at the other categories, which is dry bulk, let's say, now dry bulk is kind of in the doldrums, and the reason for that is steel demand is decreasing because of, once again, the war tensions. And in fact, demand across a lot of commodities except for coal is also decreasing. So, what does this do to dry bulk rates? I am somewhat of a perma bull on dry bulk because that sector has been beaten down for so long that I think it's going to continue higher for the next few years. And maybe you don't get amazing rates of return. Maybe you get 8 10% a year in compounding when you buy these stocks. But I think dry bulk on a secular term is going to do very well. In the short term, I'm not sure. Now, container ships, those have been the most affected because, well, cargo hasn't gone through. In fact, if you look at the price appreciation within the shipping category, Maersk, Hapag-Lloyd, all these big ocean liners, the container shipping companies, they have had the least gain from the war trade. So I think those probably will do a little bit of mean reversion and catch up, which means the opportunity right now, let's say you have a shipping allocation and you're deciding, I want to change things around. Now, your tankers have done very well. It's a higher allocation than what you would have initially put in. Maybe, you put in 30% of your shipping portfolio in tankers. It's now 60, 70%. And container ships, maybe you put in 20% and it's still at 22, 23%. So what I would be looking to do is deallocate from tankers a bit, add more to container ships, add more to dry bulk, and just wait it out because overall it's bullish. But I think within these categories, there are these nuances. And the best thing to do is to rotate, sell a little bit of your winners and put that into your laggards. And I know that sounds a bit insane, but that's the way to play this rotation within shipping.
Yeah, if also BWET, the question keeps coming up. What is BWET? It's basically it's a bunch of different tanker rates from all over the globe, put into one ETF. Used to be a very illiquid ETF. Not sure if that is that's changed over time, which I wouldn't doubt with this big move. Initially me highlighting that first at the bottom of that chart, that first breakout there. Yes, I wish myself I could have bought this thing back then. However, it was too illiquid for me to buy it. But I did say to other people if they wanted to get into it, and then it broke that all-time high, which it doesn't have a bunch of data, but broke that all-time high, and then it really didn't look back. Yes, it's pulling back a bit right now. Makes sense, but that doesn't. Once again, we're still talking about the shipping companies. The shipping companies themselves should really benefit from what's going on currently. So we'll see how that is going forward. Shop. I got to get out of here. I'm sure you do as well. Lots of things to do today. So we will see you guys soon. We'll see you guys next week on the Holy Macro Show at 10 a.m. Eastern Time. Thanks for joining us. Please like, share, subscribe. Make sure this gets out to people who need to see it. We put this on for free every week. So please, that help. When we don't come on here really sell you anything at the end of it. We're just here to talk, and Kashop and I have a lot of fun just kind of talking through markets with you guys. So please give us a share. Make sure to follow Kashop, and we'll see you guys next week.
Bye, everyone. Have a great summer.